What is up, YouTube? Welcome back to Stocks by the Numbers. Today, Wednesday, again, coming to you. It's about 20 after 2, and I wanted to do another update video here, just reminding you of not only just how awesome I am, but also, more importantly, of how investing, as opposed to trading, can actually turn out to really work out well for you. And this is why I always preach to, yes, it's nice to make money in the short term with some options trades. However, the bulk of your assets should be invested into solid, stable growth investments. What am I talking about? I'm talking about Coca-Cola Consolidated Incorporated. Ticker symbol COKE, listed here on the NASDAQ. Stock right now currently breaking out to uncharted waters, currently at all-time highs here of 783.45 a share, up over 28.5 points here, roughly 3.75% here on the day. What is going on? Well, what's going on is this company's kicking ass and taking names. And I brought it to your attention here early March, right here, March 2nd. Stock was about $550 a share. And I told you that this was the bottling facility for Coca-Cola and a bunch of other beverages in there. And the fact that this company was almost, you could say, a more safer, stable investment than actually investing into Coca-Cola. But again, that was just my opinion. But this was one that I had on my watch list for a while. I knew, a couple of years ago when I found it, that this was going to be a phenomenal long-term growth play. And that's why, I started the channel. I was looking at a handful of stocks. And then I said, you know what? Let me tell these people about Coke. And I'm just really hoping that a couple of you got involved here again. Back here, early March, $550 a share. Today, new all-time high, $783. So you are up roughly 50% in less than 12 months while collecting 1, 2, 3 dividends. And of course, the company recently announces that they are declaring a $16 a share special dividend payable February 9th to stockholders of record January 26th. So that's your ex-dividend date right there. And this is why I talk about follow the numbers, follow the growth, follow the revenue. Right? Because if we come down here, first of all, market cap still 7 1/3, right? And the company just brought in $1.7 billion in the quarter with a PE of 16. Look at the EPS, earning $48 a share. Insane. Look how low the beta is also. That's what I mean. These are the stocks. This is like the perfect storm of fundamentals. This is what you should be looking for, in my opinion, especially in the long-term portfolio. But again, even at this level, I have to still say that I feel that this company is undervalued in the numbers. And if we come down here, just look at that growth annually, not only in revenue, but in profitability as well. And interestingly enough, over the last couple of quarters, profitability has actually dropped down, but still stable here, maintaining 5+%, with the revenue continuing to climb. Was 1.6, dropped down to about 1.57, maintained that level, and now jumped up to 1.7 for the last 2 quarters. The only reason as to why this situation is an issue would be because A, if you didn't know about it, or B, if obviously you have a very small account, and with the stock trading up here at over $780 a share, this is something that you maybe can't really take advantage of. Very understandable. All of you successful young people out there in your 20s and 30s who happen to have like 50, 100K or something in an account, in my opinion, these are the types of investments you should be looking for. All of you older people, perhaps in your 40s or 50s, who built up several $100,000, in my opinion, hands down, this should be something that you're looking for. But again, that's just me. It's just my opinion. This is my strategy. Everyone's entitled to their own opinion, their own strategy. However, I'm sure if I made you, 50% in, 9 months, while you were getting paid along the way also, I'm pretty sure you wouldn't be looking for blood. I'm pretty sure you would be very grateful and very thankful. And again, I'm not even jumping into a whole long, deep analysis situation here. This is as simple as it gets. Look at the absolute rage here with the market during the month of November. And this is what I mean also when I talk about these market pumps, because on one hand, it's bad for like these small cap no name stocks that really shouldn't be going higher. So it throws your timing off, right? It throws your valuations off. However, look at the flip side. Look what it did to something like Coca-Cola Consolidated, right? If we come back here from the beginning of November, look, 1, 2, 3, 4, 5. 5 red days in the last 5 weeks. Why? Because the company was fundamentally sound. It was technically undervalued in the numbers, and now you have a market pumping, so something like this has to continue to climb higher. It has to. And that's why, again, you have the MACD absolutely raging for about the last 5 or 6 weeks. Look at the RSI here. It's been above our benchmark of 70 for about the last 3 straight weeks, touching now 83.5. But the problem now is the fact that this company, again, at all-time highs. Look at the all chart. Psst, look at that. Look at that. Imagine looking at this and not knowing if you should buy it. Psst, come on, shame on you. But anyway, this company now is what's known as they're in what's known as uncharted waters, meaning that literally anything can happen, right? It can pause here and remain flat for a month. It can continue to chunk up as we sit here as we speak and jump up to 785, 792, 801. It can literally just keep going. It can beeline straight up to this fib here, this all-time fib of $873 a share. Literally anything can happen. However, again, looking at the revenue that the company is bringing in, they're remaining positive, and also the fact that now they announced their special dividend there of $16 a share, leads me to believe that business is going very well, and obviously they had some extra cash on hand. They're paying it out to the shareholders. And also, again, we go back, the company's bringing in, even if we call it like $4.5–5 billion for the year, you can see that they're trading, even based on that conservative figure, they're trading about 1.5 times annual revenue, which, based on the stability, the proven stability of this company over the years, in my opinion, it is still significantly undervalued. And now, from this level, believe it or not, in my opinion, $1,000. This is a $1,000 stock, in my opinion. Last time I said $750 would be a layup, and obviously, as you see, I was dead accurate on that and absolutely nailed the call. So now, in my opinion, I do think it's going up to 1,000. Now, what that means is if you buy it here at 780 and it drops down to 740, don't leave me a comment and tell me I was wrong. I don't want to hear it, right? Because I brought it to you at 550. We're reviewing it here at 783. I brought it to you at 550. And again, of course, I always preach to buy the dips and sell the rips. So if you buy a rip and then it dips, I don't want to hear it. But long story short, again, I do still like it in the numbers. I think I've been very conservative with this company, and I think that's why it's performed so well. And again, you're up 50% plus dividends in 9 months. And over time, I do think it continues. I think 1,000 is very feasible. I think 1,000 is very feasible, unless profitability completely falls off the cliff and they go net income negative for some reason. But I just don't really see it happening, even with the increase in cost. Again, and we can see the slight drop down in profitability, but it seems like the company hits these new levels of revenue and like maintains that plateau and then just takes the next leg higher and then just takes the next leg higher. So that's why, again, in my opinion, I just still think it's actually undervalued. But of course, try to find yourself in a good dip position here. And again, of course, we could pull back. We could drop back down here to the top Bollinger Band, 770, and begin to flatten out and sell off a little bit. But I just have a feeling that the reward heavily outweighs the risk. And if we switch over here to the weekly, we can see the RSI is also above that 70 benchmark here, right about 73. And recently, when we hit that mark, we did kind of have a dip. But again, technically, the stock is in uncharted waters. So anything can currently happen here going into the close in the last 90 minutes. So unfortunately, only time will tell. But overall, I do still like the stock. We can see now, of course, our moving averages slowly and steadily climbing up here with our stock, with our 50-day moving average now at $615.16, and the 200-day slowly climbing. Look at this. Let me see this level here. Look at that. Back in February, 200-day moving average was about $368. Now we're up to $437. So again, this is why I speak about slow, steady, stable growth stocks, because not only does the underlying security increase in value, which of course makes you money, but what happens is now your newer support levels are now significantly higher than where they were. And again, even if we go back, this time last year, you can see 50-day moving average around 500. Now it's north of 600. This is what I'm talking about. This is why, again, I understand this specific situation may be very expensive for you and the average person maybe not be able to buy it. But the overall broad picture of what I'm bringing to the table, new all-time highs as we speak, the overall broad generalized picture of what I'm trying to bring to your guys' attention should be evident to you here. And, I have lost track of how many good discounted stocks I reviewed on this channel that have moved anywhere from 40, 50 to 100%. I'm literally losing track. And this is why, Random Steam Friend, this is why, again, I always say, you are better off working smarter, not harder. Slow and steady wins the race. Was this boring? Did it take 8-9 months? Did you wake up every day and, not make 50 grand or whatever? Yeah, all of that. However, again, I can say now, looking back, I knew at 550 that this was a screaming buy. And again, I said 750 conservatively, and now we're at 783. Probably, who knows, breaking out to 785 or even higher by the end of the day. Who knows? But there you go. So you're welcome. And hopefully a few of you got involved with this situation. And I'm going to end it there because there's really not much more to say. I believe I'm showing you guys the proof in the pudding. And you can tell also, going back to previous videos, you can tell the more uncertain and the more speculative the play seemed, obviously the lower the success rate. But when we found the right companies at the right fair valued or undervalued prices, and we knew that we had a distressed security that inevitably was going to climb or was going to rebound over time, the success rate, all of a sudden, is astronomical. That's what I need you guys to take away from these videos. And I'm going to end it there. So once again, Stocks by the Numbers. Thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky. They're volatile. They're very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you guys in the next one.